Now, cautious trading remains a theme at Nigeria's equities market as investors weigh stock valuations and fundamentals. However, analysts at Afrinvest say sentiment could turn positive as investors eye second quarter earnings. Ayodeji Ebo, head of research, Afrinvest, joins me in the studio for a market update. Thank you so much, Ayodeji.
Thanks for having me.
Pleasure to have you. Now, you have said that risk-taking investors could be compensated. Could you just shed more light on that? Because we know what's been playing out at the market in the last 2-3 weeks, and there's no sign that things could change, especially now that President Buhari has said that he's in no hurry to appoint his cabinet. Yes,
that's interesting. Having studied the trend, which especially the domestic investors in the past few months, you will discover that most of the investors, especially the domestic investors, try to wait until they get the catalyst that tries to improve sentiment in the market. And we all are also aware that most of the foreign investors are also trying to wait by the sidelines. And what we foresee is that when eventually when some of these results or the news in terms of policy, economic policy direction, actually once it comes out, that we believe that investors that have taken position now will be the one to sell to those investors that will be rushing to take investment position then, so which they will be properly compensated for the waiting period which they have been doing in the past 3 weeks.
Okay, that's an interesting way to look at it. Well, let's talk about cheap valuations, as you put it per earnings ratio compared to what investors would see or take in emerging or frontier markets. How much cheaper is it here in Nigeria if you compare it with its frontier peers?
Yeah, in terms of relative valuation, and Nigerian markets trade in terms of price to earnings around 8 times relative to peers frontier market, which are around 11 times. And in terms of price to book, it's trading around 1.7 relative to 1.8 times you find in frontier markets. So when you look at even specifically when you pick some of those stocks based on the current level in which they trade now, you still see value in most of these companies. Banking stocks, which constitute over 50% of activities in the market. When you look at in light of GT Bank, which currently trading around 26, and when you see based on the result, most of the bank were able to posted in the full year 2014 result, you will see most of them defied the challenging environment that we feel that in terms of return.
But you're expecting their Q2 results or half year to be flat?
Yes, we're expecting in terms of, because of the election that I've just rounded up, and also the delay in terms of policy direction, budget implementation will also be a bit delayed. Most of the guidance we've received from most of the management is that they will try and slow down in disbursing credit,
so their loan books will not,
which will affect the growth in their loan books, and as a result, the income they will also earn from it. When you also look at in terms of some of the economic crisis, you look at public FAC has been declining. A lot of the banks have also reduced the credit line available to some of these states. This credit line, most of these banks also earn income from it. So we expect that when you look at this in summary, you will discover that it's going to be a drag. It's going to weigh down on the bottom line of the banks.
So how bad? Because you're also saying that you expect to see a spike in impairment charges. Is that going to be significant? Is it going to be a significant spike, or is it just something that you think the banks have under control?
We still expect that based on the last result, full year 2014 result, NPL still below the 5% target of the CBN, and in terms of cost to risk, current as at full year 2014 was around 1.6%. We expect that it may increase a little bit above 2% as a result of the delay payment in terms of petroleum subsidy, which most of the credit that would have been advanced to most of the oil marketers would have accrued interest expense, which most of them will not be able to pay back in terms of the cash flow they were expecting before.
Okay, what about consumer goods? Are you a little more bullish on the consumer goods? We know that exchange rate volatility and the fact that, of course, pressure in the Northeast, but how bullish are you on the stocks?
For medium to long-term investors, so we expect that these are stocks that interest foreign investors. Once there's clarity in terms of economic direction, we expect that these are some of these stocks they will still prefer to take position in, despite some of the downside risks that we still continue to see in this stock as a result of the devaluation you mentioned.
Now, I mean, looking at the performance of the index so far, not just the index, key indices at the market. I'm looking at the Osha index quarter to date since the beginning of this second quarter is up 5.9%. The NSE banking is up 2.3%. NSE insurance is up 0.19%. NSE consumer goods up over 6%. So, you know, if you look at it, these sectors haven't actually done too badly.
Yes, you need to further break it down to which of the stock contributes to this significant growth that you are seeing. Nestle is one of the stocks that have contributed to the significant growth that we've seen in this particular space. So, but when you look at in terms of the performances you see in terms of Unilever, PZ last week was able to garner about 14%. But
for the week.
For the week on week. But when you look at in terms of some of the challenges that most of them have put in terms of in their full year result that they said in terms of distribution in northern region, which has been hampered, and we also look at in terms of devaluation. This were devalued in Q1, the CBN further devalued, and also we've also noticed that there has been reduced liquidity in terms of forex in the interbank market. Most of them will have to resort to buying at the parallel market, and when you look at this will weigh heavily on their cost of production. Okay, now
still talking about this waiting game, the market waiting for the policies of the new government, waiting for the president to announce his new cabinet. How significant or how much of an impact do you think it's having on the companies right now? I mean, the business is going on as usual. They're making purchases, they're turning out their usual volumes, or higher or lower as the case may be. What is the significance of the impact on these companies? If we don't see the list in the next 2 weeks, 3 weeks, I mean, life still goes on for these companies.
Yes, what we'll
especially the consumer goods.
Especially what we'll continue to see is investors will continue to just exercise caution, trying to see how they can buy at a relatively cheap price, so that once they are able to maximize their upside potential. So we'll continue to see, when you look at in terms of volume has not declined significantly. It's been calm, it's balanced at both buy and sell end. So investors will just continue to just take caution. We just, for medium to long-term investors, this is the time we feel that some of them can just take position and accumulate some of these consumer goods stocks that are now perceived, used to be relatively perceived very expensive, now trading very relatively cheap. So you accumulate and get those stocks into your portfolio while you wait to when things stabilize before the end of the year.
Okay, we'll keep an eye on that. Thank you so much, Ayo, for being here talking to us.
Thanks for having me.
That was Ayodeji Ebo, head of research at Afrinvest, taking us through market dynamics for today and, of course, going forward this week.